Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, the news, the analysis, so you can be informed in just a few minutes in your trading decisions. Markets, pretty broad-based rally, pretty good surge from the bell after some volatility. Matt, market didn't like having a couple red candles in a row. Looking to come back within the range and push against those resistance levels once again.
Well, yesterday's red candle, notwithstanding, I actually saw that as a bullish move, quite frankly. And so the color of the candle can be misleading. Oftentimes, you got an inside candle with a hammer kissing right up against the 9 EMA. I see that as a bullish situation, especially with the slowing momentum from the other day. And then it's not shocking to me in any capacity based on the inside candle support holding very firm and absolutely zero follow through to that 1 day sell off that we did see. We're right back up into the range. We're right back up into the breakout channel. And so you had some unfortunate volatility on Wednesday this week, obviously, but we're right back up into that upper range of resistance, and we're going into a catalyst week. And so I think the market is looking pretty good going into a really, really important week with a hefty amount of earnings and obviously quite a bit of economic reports as well. When you're looking at the landscape itself, RSP just kind of confirming off a little bit of a bullish flag-based pattern. The Q still hovering right underneath that extremely important resistance level, right at that 500 level. This is an awesome, amazing technical look when you look at it from a pure potential breakout perspective going into a catalyst week. You got to like what the NASDAQ looks like right here, as it is showing a little bit of additional leadership here today after it was kind of the causation of that sell-off on Wednesday with the Apple news. Now it's fighting back. Once again, that was a difficult day on Wednesday. And on Wednesday during the lounge, on Thursday during the lounge, we were breaking this down in minute detail. And at the end of the day, it was a single stock story that didn't have any additional volatility. And so that's how I see it. And once again, yesterday's candle, I see that as an extremely bullish candle. I know it's a slowing momentum, but when you're inside candle and you got a hammer inside candle, that is a really good look from a technical perspective. And so NASDAQ looks good as well going into an extremely important breakout. Got a little bit of confirmation on a standard bullish retracement in IWM this week. That looks like it wants to punch right back up into that 225 territory. And the diamonds here obviously looking very similar to the RSP, a little bit similar to what we're seeing in IWM in the pullback itself, hovering right underneath that 9 EMA. Dow Jones certainly has a little bit more volatility this week than we saw in other indexes out there. Cyclical's been kind of a little bit hit this week. You certainly want to see that get back up above the 9 EMA for any degree of confirmation purposes if you're tracking this bullish retracement in the diamonds themselves.
Yeah, I know. Listen, some healthy looks out there. It's going to be interesting to see what's on the traders report that we put out for our pro members. A lot expanding list as we get through earnings, more companies to choose from to avoid those earnings. On the economic front, Matt, data came in today, continued the trend that we've been seeing for numerous weeks now, above expectations, right? Now, none of these reports the market even cares about right now, a few hours after they've been released. But the trends matter in economic data, and the trends have been very positive for painting a picture of a robust economy, a resilient economy as we head into a really big week next week with labor market data, GDP, core PC index. It's going to be a busy week on the economic news front next week.
Yeah, the economic landscape this week was extremely boring. I could care less about any economic report this week. And I don't think I'm alone on that. I
Nope,
think
you
that
are
was
not.
across the board, everybody in the market. It was more of an earnings week this week than an economic one. And we'll talk about this in detail during the Trading Justice podcast this weekend. But that changes next week, obviously, with just the what we describe at Tackle as the murderer's row of economic reports. And yet I still think the most important reports are from an earnings perspective next week. That's how important of a week next week is. But we'll break that down in the actual podcast this week.
Yeah, absolutely.
Obviously in our Tackle newsletter.
No major, huge Tesla or some of the earnings that we'll be highlighting next week. But there's in this time of year, you always have a few stocks in the news. Who do you have for us?
Well, DLR, Decker, and Western Digital all reported earnings here today, and DLR is a recent newcomer to the AI watch list, the AI Gold Rush watch list that I produce at Tackle Trading. DLR is a REIT, but it's a server farm, and they certainly made it not only because they had a decent earnings report, they were lift off from a technical perspective here today. Decker came in with a better than expected report here. They came in at 159. Expectation was 122. They beat by about 17%. Revenue topped the expectations. Guidance was a slight increase from the midpoint of the range of guidance. And so I'm not going to give them the hat trick because we do have a slight increase on the guidance side of the equation, but a really good report nonetheless coming out of Decker as well. And then on Western Digital just simply honestly one of the more important tech companies here today. Like you said, Chucky, not a big earnings day here today when DLR, Decker, and Western Digital is kind of leading the conversation. But Western Digital came in at 178. They missed by about 3%. Revenue came in at 4.1. That was actually an increasing revenue handle year over year of 49%. And then on the guidance side of the equation, they guided between 4.2 and 4.4 billion on the revenue side, a little bit of a decrease from where they were in the midpoint as well. And so let's take a quick peek at these technical charts very quickly. When you're looking at DLR, like I said, they had a little bit of a gap up on the actual announcement coming out of the earnings. You look at that as a little bit of an exhaustion gap. Now, an exhaustion gap will break away. It's very similar to a runaway gap. It'll break away and then it will start to fill the gap. It does not mean bearish. What it means is you start to think about a pullback instead of some degree of momentum situation. And that's typically what you want to see on a company like DLR anyways. You don't want to see these REITs just start to, momentum upon momentum upon momentum. They certainly cannot maintain that. And so you certainly want to let that simmer down. DLR on the watch list for secondary pattern development. The candle formation shows me that we might be seeing a little bit of a gap fill on that breakout. When you're looking at Decker here, Decker a decent situation, breaking out of a little bit of a mid-tier daily chart situation. Hammer candle certainly looks like it wants to get up to that 180 level, but again, not a lot of return when you're looking at that short porch from 170 all the way back up into 180. You'd like to see a little bit of a better return versus risk ratio, and that needs to certainly get dialed in as well. And then when you're looking at it from the last stock here, we were talking about Western Digital, who had a slight drop, a little bit of a slight drop in guidance. They didn't care. It was a good day to report earnings. These three stocks, you're not talking about the Teslas of the world. You're not talking about massive increases in guidance. You're talking about good numbers, average to good numbers, but a good day to report. And that's one of the reasons you're seeing oversized price movement here. I would say that's a little bit of the case on Western Digital, as they do slightly lower guidance, had a good EPS number, but slightly lower guidance, still a little bit of a gap up situation. Wouldn't feel the need to chase Western Digital there. And that's all I got for stocks in the news here today.
Pretty boring day in the commodity front. Dollar up just ever so slightly. Last time I looked, yields up ever so slightly. Gold up ever so slightly. The pretty kind of just one of those days. What do you think about this
9 days? It's not. I don't think that's too shabby when it comes to the dollar. I could deal with a little bit of 4 or 5 or 7 dojis in a row when, if we're being honest on the dollar. But a little bit of slowing momentum is what I'm starting to see in the dollar chart. Not a lot. Still bullish and still tracking a bullish momentum flag-based pattern here. But at the end of the day, you can't start to look at resistance start building unless you start to see a little bit of slowing momentum. And that's what we are seeing on the dollar. Is it impacting anything in the commodity space? No, we got a doji on the dollar. We got a doji, basically hammer candle on gold. Once again, gold showing how just strong it is. Doesn't even want to buck anything. Hit the 9 EMA today, responded immediately back up off that 9 EMA, formed a hammer candle. Now you're looking at a high base situation when you look at gold. And then when you come over here to GDX, GDX is forming a little bit of a bullish retracement pattern, looking really, really, really good. Newmont was a terrible stock yesterday, but the gold stocks themselves, despite Newmont selling aggressively, a little bit of an overreaction, quite a bit of an overreaction in my estimation on Newmont. But when you're looking at that sell-off, it certainly did bring down those gold stocks quite a bit. And what it did is it bring it right back down into a bull zone called the rising 9 and the rising 20. And now you got slowing momentum and candle with a hammer. And so I do think you still got some gold stocks reporting earnings next week as well. It's going to be a volatile space, but I do like that pullback in GDX as /GC. The gold futures contract is just hovering right there in a very consistent high base type formation.
Yeah, gold stocks can diverge for a day or two. They can diverge for a week. They usually don't diverge much more than that.
Well, and especially when you look at Newmont Mining, right? Newmont Mining gap down, sold aggressively because they had a slight miss against EPS, and then obviously the selling begets selling, and we just saw a big red candle yesterday. But Mark, that revenue handle, because of where gold itself is, was up 85% year over year, and so I certainly am going to put Newmont on the bear hits when it comes to the newsletter this week, given the fact that the gap down, sell down behavior you can't discount. But in the back of my head, I'm thinking about all these gold stocks, not just Newmont Mining, and I'm thinking about all these gold stocks with Newmont Mining's revenue, and maybe not Newmont Mining's efficiency issues, I would say, because if you're producing that much revenue, but you can't be EPS, there's some efficiency problems within your company. And so maybe, just shockingly, maybe this is a Newmont Mining situation and not necessarily a GDX issue. But again, we do have a little bit of earnings next week as well. Silver looking really, really good off a bull flag base pattern here. We've been tracking this flag.
This thing has been a cash flow monster.
You call cash flow monster like it's a directional conversation. You're talking about a multiple time breakout. You're talking about getting into resistance. Certainly respect your cash flow comment, but at the end of the day, you're talking directional here. And the reason you're talking directional is because you've had a beautiful breakout out of the previous resistance level. 35 is that last area of resistance. And so we're not surprised that it did develop at 35, quite frankly. If you do eventually break 35, there's nothing until you start getting into the mid to upper 40 levels, quite frankly. A lot of open air, like the flag here. Don't mind your cash flow call out here. Anytime you got a bullish momentum situation, quite frankly, any cash flow system in the history of mankind will work in that environment.
Yeah, and I just have never seen premiums on SLV like this in years and years and years and years.
Well, that's because the momentum of the directional side is picking up. It works both ways, but yes, like it both. When you're looking at copper here, a little bit of just a developing pattern. I actually really like this.
I love this pattern. I do.
This is where I love your cash flow comment. Like, this to me feels like not ready yet for directional, but kind of starting to feel a little bit confident on the cash flow. What's your thoughts?
Oh no, I added some cash flow already this week on copper. All I needed to see is this start to hover. This is developing exactly what I like. This is exactly what you want to see after a big sell-off, right?
Yeah, I agree. On the directional side, I would just say wait on that 20 period moving average coming down just a little bit. That's kind of what a lot of us technicians at TAC will kind of anchor against in those deeper retracements, is those shorter duration moving averages of the 9, 13 EMA, 20 SMA. And then on the crude oil side, Mark, we're certainly seeing
this was about the most boring week in crude oil we've had in months. This was just downright boring.
It really was. You had a couple upward moves in price to start the week. You've really had a nothing burger ever since then. It's starting to slow down a little bit here, but we're still not seeing any degree of probable edge from a technical perspective. Still a pretty big stay away for most of us at tackle trading, I would say. And then heading over to church, Bitcoin just doing its doing its thing and trying to hover against an right underneath that 70K breakout. You do break out of 70, it would look like you wanted to get into the 75 to 77 level. Coach Greg was in the lounge yesterday, gave a pretty good call out on Ethereum, something to keep an eye on. A little bit of a reversal type situation happening on Ethereum at a lower point on the chart than we're seeing on Bitcoin. But at the end of the day, Bitcoin's leading a little bit of the crypto, and it's hovering right underneath the breakout channel.
Yeah, listen, we're going to be releasing the Tackle Trading newsletter later today, Trading Justice podcast this weekend. A lot to discuss. We have a very busy couple weeks ahead of us. We're going to break it all down for you, all the technicals, all the events, all the analysis. You can get that newsletter along with our traders report picks by visiting tackletrading.com and signing up for that 15-day free trial.